Hi, welcome to the Market Alert for Tuesday, 29th of October 2019. So, a bit of a prediction here. The reason for the big move in Bitcoin over Friday, Saturday and Sunday, pullback on Saturday, is the Chinese are now looking at taking Bitcoin and using it, whereas previously it was banned, and that's why we're seeing the market move to the upside. Yesterday, let's have a look. It didn't do a lot during yesterday. The pullback was mainly overnight and then into the main session. But the great thing is we're back above the 200 MA in the daily chart, and of course also in the 4 hour there as well. Just a bit of sideways move. And yesterday when I was recording, we had the sell signal. The market traded down and just below the 200 MA, and then this became a bit of a magnet for the rest of the session as the market just traded in $100 range and then just peaking out of it here, and just here you got this double top, and then overnight they rammed the market to the downside and then have brought it back to the 200 MA there as well. So it's sort of like a final shakeout before moving prices higher. Nobody really wants to sell, which seems a bit of a contradiction when you see this, but this is a shakeout. Send the market down, bring it back, come back to Monday's close, and then send it to the upside there. And you can see their price is just peaking above the 200 MA to move higher. So hopefully the volatility will increase today, because it was awful yesterday after the market moved to the downside. It didn't do anything. It just stuck in this sideways range. We had more activity during Sunday's trade, which you can see there. A far bigger move and far better trade. Bizarre. Maybe it's just a consolidation after the big move there. Meanwhile, in the US, we've got the stocks squeezed to record high on trade and Brexit hope. Again, yeah, you can say again. It's becoming a bit wearisome, isn't it, all of this? I mean, you can see here that to try and break the deadlock, apparently there's going to be a try again for a pre-Christmas election. I don't really take any notice anymore. The only reason that I have a sort of keep in touch with it is purely and simply for the pound, just so I can see what the pound is doing, because obviously it's going to move in relation to this, except for yesterday. Didn't really do a lot. I think it was because it was already forecast that he would lose the vote for the 9th of December. And then the market eventually broke the 200 MA and moved high. You can see the buying there. Market sitting at the DP level as well. Always a good sign that the market is likely to break to the upside there. And overnight coming off the 200 MA and sitting on the DP level as well. Back above the 20 and back above the 50 there as well. News, what have we got? CB consumer confidence. The market's waiting for tomorrow's, which is the Fed's decision. And yeah, let's have a look at the Dow. This is out at 2 p.m, normally 3. By the way, yesterday I forgot to mention that you need to change the times in the software. The US don't put their clocks back until this coming Saturday. So for the Dow, make sure that your primary trade time, that's the daily, let's get the 5 minute, is 13:30 and 19:30. Click apply and then make sure that you save it, and then we'll put this back on Monday. So let's have a look in the daily chart first. The market continuing to move to the upside. Maybe it's factoring in the rate cut already, and I believe so. I think we're going to see the market have a bit of a punt back to the all-time highs. The problem is, what's going to keep it on the highs? That's the question. So yesterday, the market managed to do this. It moved higher in the pre-market session. No surprise there. As you can see, the market coming close to the 200 MA. It was also a 76% retracement, which I was playing around with in the pre-market session, and it was just a one-way bet as the market was brought higher. Again, this same pattern that the futures market moving prices in a nice smooth uptrend seems to be the case of late. Then as soon as we get into the cash market and traders start offloading their cash positions, then all things change, which you can see. You can see there. We've got the double top, the R2, and then the market moves lower and trades all the way down to the 200 MA when they bring prices back just before the close. So the plunge protection team selling either VIX futures contracts or just pumping some more money into the market. I suspect the former rather than the latter. So overnight, the market again has meandered down, but as we get into this session, I wouldn't be at all surprised to see prices move higher. We're at the DP level, close above the 200 is what you're looking for here. Now, the reason why I'm saying that I would expect the market to move higher prior to or following the Fed's announcement, if they do cut rates, is because of the implied volatility. This dropping down to 1186 yesterday, fairly big drop. We're back down into these sorts of areas now where we could expect a correction. We're going to get it today. It's going to be a case of, as I said earlier, what is the market going to move higher on, apart from Trump's trade deal after the reduction in interest rates? Because they're already printing 60 billion a month to keep everything afloat. So it will be very, very interesting. And again, you can see this here. So at the moment, the market is bullish. Let's see what happens at 7 p.m. tomorrow evening when they reduce interest rates by 0.25%. Here's an interesting thing as well. The yield curve is definitely normalized now. As we see here, 0.2 as interest rates start to rise in the background. So we've gone from this low, we've followed this all the way through. We know we have a recession coming because we've seen it time and time again. All of the blue vertical columns are recessions that are preempted or preceded by the inversion of the yield curve, and that's where we're at now. And you can see the green shoots, not of recovery, but of a potential recession looming there. So that's it. Let's have a quick look and see what's happening with Deutsche Bank. Not a lot, I suspect. I think the repos are definitely keeping this one afloat. So Deutsche Bank still above the 200 MA, so not a lot to report there at all. So yeah, it's Tuesday. It's the day before the FOMC. The likelihood of rates being reduced is significantly high. And again, keep this in mind. It could have a bit of a down day today, quiet day. Tuesday, everything factored in from the weekend before we see the market move higher in tomorrow's pre-market session. Pound probably won't do a lot unless he either gets this through for the 12th of December, his election, or they don't have one. If they don't have one, well, that's going to create even more uncertainty. Apparently, if I think this is right, they wanted the 9th, but they wouldn't, or the other members of parliament wouldn't allow it. They want the 12th because university students can vote twice, apparently. And yeah, very odd. Anyway, I don't quite get it all. It's all become totally madness to me. Much rather look at the figures, what's going on in the background, and that's not pretty. It's like I've always said, Brexit is a bit more of a distraction than anything else, whilst all of the other stuff is going on in the background with the likes of the yield curve and the printing and the repo markets far more interesting and fascinating, and really trying to get to grips with what is going on when they've actually upped the limits now to 300 billion to support the overnight banking system. Okay, that will do it for this one. And if there is anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.